Knowing of current business cycle stage is very important for asset allocation. First, let's take a look at the Fidelity business cycle estimation chart. This chart is usually posted by Fidelity each 6 months, and it's pretty good to illustrate the current state of the global economy. As you see as this chart, most of the countries now are in the declination state of the business cycle curve. And if we look at the China is located in the recession business cycle stage. So the other countries only tend to move into the recession phase and not yet located into the late cycle phase. If we compare this data with previous report at the February, you see that in this report, significant amount of countries are located at the middle point of this curve. You can compare, but now we are start rolling down. Some expert and I personally think we are in late cycle already. Let's take a look at the yield curve. Yield curve is the difference between some long-term treasury bonds and the short-term treasury bonds. In case if a yield curve is flattening, so difference is near zero or below, like here, we have a flattening curve state. That means that soon we should have a recession. This happens in a couple of months before COVID recession. This also happens like half year before the recession of 2008. This also happens in 2000 and a lot of times before. So it's pretty good indication that we soon will get a recession. And usually when you get a flattening curve or inversion of the yield curve, you are in the late cycle. So according to the yield curve, we are in late cycle. Now let's take a look at the let's look at the 3 months yield chart. I display this recession, all recessions that we have before, like we have 4 recessions, and the interesting things that usually before recession, government is change the monetary policy, so it's easing monetary policy, and you see this decline here, before the recession, and usually this grow and decline is a late cycle. So when we are in late increase and decrease, we usually in the late cycle, and next would be a recession, especially when this chart drops sharply. This means we are in recession. Currently at the chart we see the beginning of the tightening policy by the Federal Reserve System. And if we're talking about business cycle, we can say that this period here was an early stage of the business cycle, when everything is growing, lots of cheap money, etc. Then we start tightening, and pouring money become more expensive, and we can say that this one is probably a middle cycle here. Then we should get a late cycle and the recession. That's how it should work. Now let's look at the index that contains all assets that perform best at the first stage of the cycle. This is usually a high-risk assets, and here we see that we have a huge plunge of the stocks. Basically, a lot of people lost money here at the start of the year because we have some changes in the environment where the usually good performance stocks, like tech stock mainly, start to perform really bad. So this means that probably we have some cycle here that is over, and we get to some another stage. Now let's take a look at the second chart. Here we have stocks that should perform good in the middle phase of the business cycle. And yeah, this is mostly information technology stock, industrials, and communication services. And what we see that the situation is even worse. So that's definitely not a middle cycle. And if we look at the stocks that should perform good at the late cycle, you see a huge rise here. The same as the stocks that should perform good in the recession. You see, it's like what this tell me is that it looks like we are more in the late cycle than in the middle cycle. In the late cycle, we have like the most performance we have. It's from materials, from consumer staples stock, like the staples. It's goods that you need, whatever happens, like food, water, also utilities and healthcare, energy. And you know that at the beginning of the year we had like energy stocks rising a lot. So, for example, if we take just staples, for example, the VDC staples, and divide it to the S&P, you see that these stocks from the beginning of the year starting to grow. According to what we see here, is that maybe technically we have a middle cycle, but in fact we have a beginning of the late cycle, and we should invest in the assets that performs better in the late cycle, and not into the assets that perform good in the earlier cycle, like tech stocks, etc. So if you look at the S&P 100, we should consider that in case if we are really in the late cycle, we should not expect a significant recovery of the S&P, So that could be something like this, and then we go into the recession. Or if we are still in the middle cycle, there could be that we may grow and get like a second top and then go to recession. In the next video, I will make an overview of US assets like S&P, NASDAQ, and a couple of good performing assets for late cycle. I hope you like this video. Don't forget to press like button and subscribe. This helps me a lot. Have a great day.